this is Vaishali Siddhappa and welcome to my channel Complementary Economics, and today's topic, Scope of Business Economics. The scope of business economics is quite wide. So we can, to solve the practical problems what we have in the economy, so what we have done is we categorize this in two different sections. The one is internal issues. Another one is the external issues. Internal issues, even it is called as operational issues, otherwise microeconomics applied issues. So now three different names: microeconomics applied issues, internal issues, operational issues. Let's talk about what is internal issues. Whatever the issues we face within the organization, that is called internal issues, otherwise operational issues. So, like, what are the problems we face? It can be about the organization, how you're going to run the organization, what should be the size of the organization, which good you're producing, which kind of a technology you're going to use, what are the factors of production, which combination you're going to use, what price you're going to fix, how you're going to do the marketing, the sales, promotion, how you're going to finance it, and what will be the investment, and how you're going to manage the inventory. So inventory, I'll talk about it later in the same topic. These all the topics are going to decide. We're going to talk in internal issues, operational issues, which is almost related by microeconomics. So the first heading, like the microeconomic side, which is internal one. The first one, demand analysis and forecasting. What is demand analysis is all about? First of all, we'll talk about the demand, then we'll talk about the forecasting. Demand is nothing but anybody to survive, to fulfill their needs, whatever the goods they're going to purchase, that's called as a demand. So when they're going to demand any of the goods, so it is completely who is going to purchase, that is purchased by consumer. So in this demand analysis, we're going to talk about how consumer is going to behave in the market, and how prices of the commodity is going to change, what will be the income of the consumer. A whole sum, we can say how exactly one individual who is going to demand the good, how he is going to react when price changes, income changes, commodity itself is going to change, how he is going to react, that we are going to analyze in demand analysis. On the other side, we have forecasting. It can be demand forecasting, forecasting. The forecasting is nothing but predicting the future. So again, we're going to become a Jyotishi for the future. For an example, I'll just give you an example. In 2001, the population rate was 102. In 2011, the population was 121. So in 1991, the population was around 82 crores. So what we have analyzed is 81 to 102, 102 to 121 to 122. What we have understood is each census we are going to carry extra 20 crore population. That means each year we are producing 2 to 3 crore of population. So what we have got to know is, what we predicted is, in the year of 2021 and 22, the population can be around 140 to 150 crores. This is the expectation. This is the prediction what we can do, because each census carrying 20 crore extra population, so we can predict the future, like 2021-22, the population can be 140 to 150 crores. So this is what forecasting do. The forecasting means predicting the future. What you going to predict? How consumer is going to behave, what will be how prices are going to change, whether the income of the consumer is going to change. These all things we're going to predict, so we can be prepared for the future. Why you have to prepare and how you will be prepared? You will be prepared for the raw materials. If you need extra raw materials, you should be prepared for the factors of production. For like land, do you need extra land? Do you need extra labor? capital? Do you want to increase the size of a plantation? Do you want to increase the production? Do you have to invest more money? Do you have to change the marketing strategy? These all things can be done by using the 10 to 15 years data. So this is called forecasting. 10 to 15 years data, 10 years data. By checking that, we're going to analyze, we're going to predict the future this can happen. That will be very helpful for the production sake. How much you're going to produce, how much raw materials you're going to purchase, how factors of production will be used, how much you should invest. If you have to increase the investment, you should be able to arrange the investment. You should be able to change the marketing if it is going to be unexpectedly something happen in the market, if you're going to analyze that way. So that is called forecasting. So yes, forecasting also plays very important role when it comes to business economics. And then the second point here you have, that is production and cost analysis. What is production is all about? The production, it can be called as the relationship between input and output. The relationship between input and output is called as production. What is input here? Whatever the factors of production we are using, including raw materials or any other thing, that is called as input. Output means finally by using all the inputs like raw materials, production factors of production, finally what you are producing, that will be called as output. The relationship between this, if you are going to analyze, that's called production. So in this one, what we'll get to know is what will be the size of our output, how much we are producing, and whether we are bearing more and more cost. So we always try to fix least cost methodology, least cost mix, least cost input mix. Least cost means whatever the cost you're going to bear to produce any of the good. So the cost should be least one. That kind of an input mix you're going to use it. So these all things will be analyzed in the production process, so efficiently you can use all the resources and you can produce the best good out. On the other side, we're going to talk about cost analysis also. What should be the cost? If the cost is less for the production, the profit will be more. For that reason, least cost methodology will be analyzed. What is the cost we are using for the inputs? If you're going to reduce this, the profit margin is going to increase. How we can increase the profit margin? So we can analyze these all things by only one thing, that is by analyzing the cost analysis and the production analysis. You have to bring the relationship between input and output, and you have to pick those goods with technology by adopting more and more good techniques and technology, bringing the cost very less, so where you can bring more and more profit out of it. So this we're going to talk in the production and cost analysis. And the next one you have here, that is inventory management. I just told you in my first slide itself the inventory topic I'm going to talk after this slide. So right now we're going to talk about inventory. What is the meaning of inventory actually? The inventory means the goods which is not produced or anything which is forwarded to the next financial year, which you're going to forward to the next financial year. For an example, I produced one of the good in 2011. I couldn't sell in this year, so I am transferring that to next financial year, which is 2012. The good which was here purchased that couldn't sell, so I am transferring that to the next financial year. So the goods which is transferred to the next financial year, that is called as inventory. So here the topic comes, what is the inventory management? Whenever you're going to manage any inventory, you always want a lesser cost for that. If the cost is very less, you will be very happy. So where if the cost is less, definitely the inventories, you would like to keep more stocks. First of all, for the next year, you want to produce everything right now in this year, and you want to carry that to the next year. You want more inventory stocks. In this situation, if the cost is less, that becomes very easier for the producer, for the firms, for the organization to manage any business. So for that reason, Inventory, it is not like only finished goods. It can be raw materials, it can be the goods which still in the process of a production, it can be finished goods. These all three can be considered as an inventory. The raw material can be transferred to the next financial year. The goods which is still in the process of production, that can be transferred to the next financial year. The goods which is already finished, the produced final goods can be produced, transferred to the next financial year. All these three can be called as inventory. So how are you going to manage this with the lesser cost? That really makes a sense. So in inventory management, we're going to learn this. At the same time, in this one, we have few of the analysis like ABC analysis and simple simulation. Simple simulation theories and mathematical models. ABC analysis, simple simulation, mathematics modules are going to help us how we can maintain more stocks in the lesser cost for the next financial year. So this is analyzed by inventory management. And the next one what we have, that is market structure and pricing policies. What is market structure? It is always a complete information about how is the competition. How is the competition? When it comes to competition, when you're going to face a competition in the market, there are different kind of a competition. It can be perfect competition, it can be monopolistic competition, it can be monopoly competition, it can be oligopoly competition, it can be duopoly competition. So so many kinds of competitions you have. So market structures helps you to understand every kind of a market structure, to understand what should be the price and how should be the good, what kind of a technique you have to produce and what should be the cost, how you going to do the marketing. So these all can be analyzed by understanding market structure. If you are aware of the market structure, only then you can go with fixing the price, how you're going to produce the goods, what is the technology, what should be the cost, how you're going to adopt the market strategy. Everything is dependent on which kind of a competition you have. The market structure helps you to understand different types of a competition in the economy, which helps you to fix the pricing policies also. Whenever you're going to purchase any of the good, the most importantly what you're going to observe and psychologically what thing is going to affect you, that is pricing. When it comes to pricing, any good you're going to see, if you do not buy that just because maximum time, it's because of the price. If the price is less and even you liked it, you're going to buy it, because always a consumer psychology, it depends maximum time on the prices. So pricing policy is also very much important when it comes to any market, different kind of a market conditions. And the next one, resource allocation. What is the meaning of resource allocation? The resources what we have in the economy, how it will be allocated to the people, that can be understand very easily with the linear programming. The linear programming analyzes and makes you understand the best, to understand optimum utilization of the resources. How optimum means 100% utilization. How any good can be used 100% without wasting it. So that can be understood by resource allocation. The next topic what you have, that is theory of capital and investment decisions. The investment is really important. Any organization owner who is a producer, entrepreneur, always what he wants is, he wants the maximum profits. His expectation is a maximum profit. When he wants the maximum profit, definitely he thinks about the investment. Regarding investment, what should be the decision he should take, and what is the capital formation policies, and which can be the sensible policy he can take to make more profits. When it comes to investment, a scientific criteria we're going to observe. So through that we'll analyze the economy and we'll take that kind of a decision which supports the economy, our business, if you have a scarce capital, so you will see how competing it will be and which are the alternative things you can use. So investment decisions, completely it is very much important, that related to internal one. Next one, profit analysis. Who are not expecting profit when they are in the business? Everybody want the business, everybody want the profit. So this particular dependent on market structure and the market condition, how the market structure is. On the basis of that, profit will be decided. The market structure is going to guide us, like how you going to make a profit. And so many see, profit, it's completely uncertain. You cannot make a guess, make a guess, this year you're going to get 100 rupees, next year you're going to get 200 rupees. You cannot make a guess. It is completely unpredictable and uncertain. So even that can be planned properly with the help of a perfect profit analysis and the perfect profit policies. And the next one, risk and uncertainty in analysis. What is a risk? Whenever anybody is doing business, right, that is nothing but a risk. Don't you think like the person who is investing a lot of money, do you think he's sure that he'll get all the investments what he has invested? No. He's just taking a chance. He's just taking a risk. Every business, every firm is on risk. So in this way, the situation what we are going to see, it is completely uncertain. You cannot expect this is the income I'm going to get, this is the investment I'm going to do, this will be the profit margin. Nothing. How much ever you work efficiently, but still uncertainty and the risk will be there whenever you are into any kind of business. So for that reason, by reading the past data, by collecting the information of the past, and by observing the present information, current, how exactly economy is, on the basis of that we can do future prediction to reduce the risk and uncertainty in the business. So these are all topics of internal issues, operational issues, microeconomic issues. And the next one is macroeconomics applied completely. It's called external, environmental issues. Out of the organization, which are the things affects the business, those are called external, environmental, macroeconomics issues. The issues which is going to affect, the first one is economic system. It can be socialistic, it can be capitalistic, it can be mixed economy. The kind of economic system we have, that is completely dependent on how business will be run. Business cycle. We have a chapter itself in your syllabus. Right now, if I explain about the business cycle, you can say that what is the position of the business, whether it is very successful, it is in the stage of boom, because of the depression, the business is completely nil. So this is called as a cycle. Is depression, prosperity, recovering, prosperity, boom. So right now you will not understand this. When I'll come to the chapter itself, I'll explain you better. Right now just understand business cycle. It explain how your business is all about. And national income. What is a national income? How aggregate employment, what is the aggregate prices, how people are saving in a country, how investment they are doing. And government policies, it can be about industrial policy, competition, fiscal policy. Fiscal policy, it's all about trade. Foreign trade, when you're exporting, importing, for that you will be having a trade. When you're trading with other countries, the global policies you will be having. So this way government policy is also going to affect the business. And then socio-economic organization, like few people are there, they made a group union to help each other. So like trade unions, they have formed to help in a trade, and producer and consumer unions will be there. So consumer to help each other, any consumer is facing problem, to protect that consumer interest. Producers are the same way, to protect themselves, they have one of the union. So these unions also going to affect, maximum unions, like when they come for a strike and all, that how it's going to affect the whole economy. And socio-political environment, how our society is and how our politically strong, stable, that also makes worth understanding the business economics. And the last one, the financial sector. Whenever you're going to invest, the most importantly what you need is an investment. How your investment will be decided? Like how the financial sector is. If the financial sector is good, they have good finance, economy completely balanced, so definitely you're going to get good money. If it is not, so definitely the regulations will be more, you will be constrained for the capital market. So this way, these all the topics which makes us to understand the scope of microeconomics and macroeconomics issues when it comes to business economics. I hope you have understood this. So this is the last topic of this chapter. So next video it will be on the second unit. Thank you so much. Hope you understood everything. So please subscribe and share. Thank you.